Today we're going to be looking at the Williams %R indicator. This indicator was developed by Larry Williams, who is a trader and wrote the popular book, How I Made $1 Million in 1 Year. The Williams %R indicator is a momentum indicator. The scaling for the Williams %R indicator is a little bit different. It oscillates between 0 to minus 100. Readings from 0 to minus 20 are considered overbought, and readings from minus 80 to minus 100 are considered oversold. So let's go take a look at that indicator now and see how you can use it in the markets. We're looking at a daily candlestick chart going back about 6 months, and what we have to do is put the Williams %R indicator on this chart. Now, oscillators typically go below the chart itself, so all you have to do is go to the below chart studies on Market Club, click once, scroll down to the Williams %R, that's the indicator we want to put on the chart, and just click and then just move the cursor off there, and that automatically closes the window. Now, as you can see, the oscillator below goes from 0 right here down to minus 100, and we have some lines in there, the minus 20 and the minus 80 and the minus 50, which is the midpoint. These are all important lines, and we'll be talking about those in just a moment. But typically, when the market is above the minus 20 line, it's overbought, and conversely, when it's below the minus 80 line, it's oversold. The key thing using this indicator is with a strong upward trend like we're seeing here, you really have to be careful, as just because it hits overbought doesn't mean it's automatically going to go down. It just means it could stay overbought for quite some time. In this case, for pretty much all of September and really the early part of October. So again, these markets can stay overbought and oversold for quite some time. The other thing you can do with this indicator is move the parameters around quite easily. So it's set at 14, which is the default parameter, but you can move it like this, and you see how things change, and that is a 50-day Williams %R. It gives you a different dynamic of the indicator itself. As you can see here, it's overbought for a much longer period of time, and it really never gets below the oversold condition. Now, for our purposes, we're just going to stay on the minus 14, or the default setting for the indicator. So just go back to the indicator under the below chart studies menu, and simply you can do reset, which is right here, and you can also read about the indicator here if just close that up, and let's look at the chart. One of the other important lines we said is when the market goes below, think of the 50 line as like a midpoint in terms of the cup is half full or half empty, and I think that's one of the best ways to describe it. So the reality is when the market really pulls down, now this is a good example of divergence. We've talked about divergences. The market made a new high here, but it wasn't followed by the Williams %R. That was a pretty strong indication that the market was probably going to go down. Plus, when it went below the 50 line, it also is another indication that you're going to see some further weakness, and that's exactly what transpired. Now, conversely, when the market moved up and moved over the 50 line, you can see right here that it actually started to go up into an overbought condition again. So it's very good for catching the turns. It's not to say it's perfect. No technical indicator is perfect, but it's a very good indicator, and I like to look at it in my own trading. So looking at it again, we move over the 50 line right here, which is right this point here, and you can see how the market moved up dramatically. So that's one of the ways you can use the Williams %R indicator.